You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. Yep, it is time for the old OB, a.k.a. the Option Block, a.k.a. your bi-weekly source for all things options related. A little bit of options wit, some wisdom, some analysis, some unusual activity, a whole bunch of edumacation, a bunch of your questions, and stir it all together with some strategery and looking around the block. You got the old OB. My name is Mark Longo from this network, as well as, of course, from theoptionsinsider.com. If you like what you hear on the network, or the show, whichever bit you like the most, make sure you leave a review so other folks can continue to discover this content in these trying and turbulent times out there. And, of course, keep those questions coming, particularly for a day like today, because it's mail block day. So if you're going to send it in, maybe, if it's a good one, we'll get it on the show. And let's see who else we're going to hear from on the old program today, who's joining us on the old all-star panel. First, we go out to the quiet shores of these here United States, where we are joined once again from the GIOVINAZZI compound. He was social distancing before it was a thing. Yes, he is the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital, by way of a little place known as Maine. Mr. Rock Lobster, welcome back to the program, sir.
It is good to be back, and and kicking around these here parts and this Option Insider Radio Network.
It is good to have you back, sir. And then we turn our attention, our gaze, a little bit closer to home, out to another sleepy, tranquil part of these here United States, this time St. Charles, where we are joined once again by the uncleest of Mikes, Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, to you as well.
Always happy to be here. Maybe I should go by Airwolf today. I'm kind of feeling that right now.
I will say the Earwolf did draw a response from our listening audience. They had some comments and thoughts. And in fact, we have received, people are getting into that 80s theme kickoff for the week. So we have had a few listener-oriented suggestions for ones they want to stump you guys with next Monday. So be prepared for some fun ones in the coming weeks as we continue on into our next segment. It is time for the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading, what is lighting up our collective tapes here on this Thursday. And you know what? For a long time there, the narrative was, man, this rally just seems like it has no end to it. And then for the last few weeks, we did see the end, at least for the near term. And we were wondering, man, does this sell-off have an end to it? It's pretty aggressive out there. And now we're finally seeing a little bit of the warm turning, at least for today. The markets were a little bit jittery to start the day, but now they're firmly in the green. most of the major indices, it looks like NASDAQ leading the charge, up a little bit north of 1%, about 1.1%. S&P up about 0.85%. Dow up about 0.75% out there as well. Let's pull up a little bit of small cap, too, because we'll be getting to that a little bit on TWIFO later today as well. Small cap's kind of right in the middle there as well, just behind NASDAQ, but ahead of the S&P, up about 0.95, so almost a full percent for the small caps out there as well. Our old friend VIX Cash coming into today's show was almost literally unched from our last episode. I think it exactly is, actually. It's about 28.8. So that puts it pretty much exactly where it was this time last show. That's a pretty rare occurrence. VIX is usually a moving target. It doesn't stay in one place for too long. So to get it lined up like that, pretty strange. A VVIX at about 102, almost 103. That puts it down over 8 handles, about a little north of 8.5 handles from last show. So back south of that 120 level, but also not quite through that 100 level. But we said before, that par level, that 100 level, seems like an interesting new barometer for VVIX. So if you start threatening it again to the downside, it might be some interesting things afoot in the vol space. And VXX back on the upside after having a lot of juicy erosion for a while there. About 26 and a quarter, puts it up a little more than half a handle, about 0.65 from where it was last show. All right, let's go around the horn. Let's go around the horn the way we came. Let's start with our Stringfellow Hawk here on the panel, a.k.a. the captain of the Airwolf, a.k.a. Uncle Mike TOSAW, because it is an Uncle Mike type of day. Uncle Mike, sir, what is lighting up your tape as you're humming the Airwolf theme to yourself again?
Absolutely. Today was it was an interesting open in that just from the close of the market yesterday till today, we were kind of flat overnight for the most part in the futures. Then we came down a little bit, and then we came up a little bit, I'm sorry. And then probably at about 4 a.m. or so, looks like that was about the time that we hit the highs in the overnight market. Markets came down, and then probably around 8 o'clock Chicago time, it was not looking like it was going to be a very pleasant market down the day. What was interesting from what I saw in the overnight market, we bottomed out right at the 320 level, right around 8 o'clock on SPY. So then we remained flat for a little while. Going into the open, we come up, then we dip below the 320 level. Now, to give you some perspective, the open of the year, which I believe is a key number, is 321.87 in SPY. And so you have that along with the key number of 3,200 in the S&P /320 in SPY. So we did break that briefly. Now, with that, what we were able to do, we rallied from there. It was very much rally-ho from shortly after we touched that at about 8:40 till about 9:15. And then we had a little bit of a pullback, but now we're making new highs for the day at this point in time today in the marketplace. So what I'm seeing right now in the market is that the market is respecting the open of the year, and the market is respecting the 3,200 mark on the S&P 500 as kind of a means of support, at least so far. Now, I'd feel a lot more comfortable, me being the bull that I always am, if we could follow through tomorrow. Because with the drop that we've had this week, we're still down on the week in the S&P 500, but we'll need a follow-through day tomorrow if we want to see if perhaps that was something to where we bounce off of the support level. So we may have had our chance this morning to buy this market, but who knows, of course, as with anything. So with what I'm doing right now, I have a little bit of half a position doing an out-of-the-money call spread a few months out. And so I also sold a put spread last night below below the open of the year for the S&P 500. So I'm kind of doing a couple of things at this point in time. But I definitely was trying to buy a little bit of the dip this morning because I did get hurt a little bit earlier in the week, but I'm getting better, so to speak, today. But nonetheless, this tomorrow I think is going to be a very key day with the overall market. In terms of some other things that I'm seeing right now, silver has gotten the tar beat out of it the last couple of days. So with that, I think that it's I had a call spread on it as part of my risk reversal collar turned levered risk reversal without using the leverage part, so to speak. And I closed out my short call on the call spread. So if silver does come roaring back up above the 30 level, then there'll be a whole lot of grinning going on, mostly by me. So we'll see where that's at. But where we are right now, I hedged very tightly with that. And it was one of those trades to where we had a good run. I hedged everything, and I wanted to be greedy, but I hedged everything because I knew if I was wrong, I didn't want to get burned for being greedy. So we're in pretty good shape with that. Looking at bonds are rather flat for now, which has been kind of the norm at this point in time. And so I think that tomorrow is going to be a key day. But also remember, we are in an election season. We're in a global pandemic. We are in all sorts of crazy things that are happening right now. So a lot to look forward to for potential market events over the course of the next couple of weeks.
Well said, sir. Let's keep on looking as we cast our gaze back to those tranquil shores of Maine. Mr. Rock Lobster, a lot to parse in this back turnaround day, rebound day, or perhaps just a little bit of the old dead cat bounce before the slaughter fest continues. What is lighting up your tape out there today, sir?
Well, I guess not unlike TOSAW said. Like a vol point of view, I think vol is just a crappy trade from now until the election, to be honest. I mean, unless something happens, I think a couple things that could be interesting from a vol point of view is the possibility of an October surprise as far as a vaccine goes. So I think Pfizer is the one up. That's a potential positive, which could be a vol killer. Then, of course, everybody will be happy for a minute, and then they'll go back to the mayhem in the streets in the election, and that's what's keeping vol up. There's been a lot of stuff on like Twitter sphere about, why is a vol? Why are these futures so expensive? And like all it is just it's the known unknown, right? It's the election. So I think the market is trading like a giant earnings cycle. It's just the election is the thing, and the SPX is the underlying, and it's exhibiting like the curve is exactly an earnings cycle curve. If you look at any stock that has earnings, it's all the same. So what happens though is all those contracts in the short term in the front month, tend to kind of just die. So normal calendars that I think you don't have any edge in them to do them might work because the back month just isn't going anywhere. So I think there is something to that as far as a trade goes. That could actually make some decent money. So, I don't know where we go market-wise at this point. I think there was some sort of like bad COVID feelings, the EU or UK or something, because if you look about it, all those stocks that are what I would call COVID sensitive, banks, retail, all of them, just really having a horrible time. Airlines, and then California is basically going to ban gasoline-powered cars in 20 years or 15 years. And that kind of hit, I think, all the oil stocks, brought them all down to, again, lows since April, I believe. Actually, I'm positive because I'm looking at all my oil stocks just getting smoked. So as far as all that goes, so there's those are a couple of negative things. VIX went to 30 pretty easily, but the futures are just not really moving. So I've got a little bit of VXX on. If I don't get any action by tomorrow, I'm probably going to bail on it. We might see some decay out of it, but for the most part, if you're looking for a mover and a shaker, I don't know if you're going to see it out of all. Like I said, there could be those positives that are lingering out there. Especially vis-a-vis the vaccine. I think that's the best news we could get because if we could start vaccinating, the most the most at-risk part of the population, I think that would take care of 99% of the problems as far as, what people are, freaking out and stuff about. So I think that's what we have. Because you're not hearing much about the economy or anything else anymore. it's like you kind of got to get some vaccines now and sort of get by this. And I think, from a market point of view, we're I think in this sort of up and down, back and forth phase until we get some more solid news on the vaccine front. There was a lot of kind of negative news, a little better news last week, but more negative this week. So apparently the Russian vaccine and the Chinese vaccine, nobody seems to care about right now. So haven't heard anything on that front yet. So I just think we're back to all COVID sort of all the time until the election gets closer.
And that election is looming. It seemed like it was so distant not too long ago, and now here we are with it right in the forefront there. Let's see what's on the forefront of your trading out there today, listeners. What are you folks slinging out there? Let's start in VIX land. Not a heck of a lot of paper on the tape in VIX land. They may continue, or I should say that may change if these trends in the market here continue. We shall see. About 122,000 contracts as of a few minutes ago. The ADV just a tick under 400K again, so dropping back down a little bit there. SPY at about exactly 2.5 million contracts. The ADV about 4.33 million. The S a little bit north of 500,000 contracts, about 521. The ADV almost 1.2 million out there. The Qs closing in on 1 million contracts, over 900K on the tape right now. The ADV about 1.5 million. So the Qs once again on fire for some aggressive action out there. And the Russell, a.k.a. IWM, on pace for nearly 500,000 contracts. The ADV is 433 out there, so IWM on fire out there today. Let's see what's on fire in the single names. It's an active day. I wouldn't say it's a blow-the-doors-off kind of day, but still pretty active. Number 10, Amazon, back in the top 10 there again at number with 186,000 contracts. So it cost you $1.86 to break into the top 10. That's decent paper, but it's not, $2.50 to start the top 10 or anything like that either. Number 9, our friends across the street back in the top 10. Boeing there, 194. Maybe they reopened their cafeteria for lunch, and that's how they got busted into the top 10 out there. I miss those days of the Wednesday outdoor barbecues and everything else they used to have over there. Yet another unheralded victim of the pandemic. The Boeing lunch, 194 on the tape for number 9. Number 8, NIO, the old electric car manufacturer there at 196. Number 7, Softy, still embroiled in this post maybe TikTok drama. What happened over there? Is there some skullduggery behind the scenes? Also some gaming news driving. A lot of things going on there. Surface Duo maybe not a hit. All sorts of things going on in Softy land. They're up there for 203, so it takes to number 7 to break through 200K. Number 6, Bank of America, 211 on the tape for number 6. Number 5, AMD, 215. Number 4, Zoom back in the top 10. It's been a little while for them. You think they'd be up there a little bit more given how popular and active they are these days, but they're there for number 4, 244, closing in on 250,000 contracts. Then we go to number 3. Kind of a broken record here for some of the top ones here. Nikola, 341. Once again, having some drama out there in electric cars. Go figure. Electric cars and drama seem to go hand in hand these days. 341 for Tesla, Nikola, number 3. Number 2 is Tesla with 1.06 million. I don't think there's been a day where these names haven't done a million since the split. It's been just amazing paper in Apple and Tesla. Tesla, number 2, 1.06 million. Number 1, Apple, 1.4 million contracts. It's just the gift that keeps on giving from the brokerage space out there. Let's look really quickly. The Apple paper is actually pretty egalitarian. It's only 65% on the call side compared to some of these other names. That's not a lot. And actually, Nikola, once again, dominating the tape to the dark side. 72% of that paper coming on the put side of the ledgers. Here I am saying all the time how it's all calls all the time. And yet, Nikola busting that tape wide open. 72%. NIO is the other way. 72% to the calls. So I guess pick your electric car manufacturer. That's the way you're looking at them out there. A couple other things popping off on our radar. Let's look at some of the earnings first. This week we had AutoZone, we have Nike, we had Stitch, we had General Mills, we had Rite Aid today. Looks like I think they're after the bell. CarMax, Darden Restaurants, a bunch of other ones going on out there. So it still is earnings season if you like to focus on such things. We have the earnings preview reports here for a bunch of these names. If you want the move results, actually I do have some here. I have a move results here for Rite Aid. They were before the bell today. They were at $13.35, and they were pricing in percentage terms about almost 17%, about 16.9%, and they delivered, at least at the time of this report, about 14.5%. So go figure, underperformance from a volatility perspective. Darden restaurants, they were at $90 even going into their report. That's an interesting one. They were pricing in about almost 5.5%, and they delivered actually 7.3%. So a little bit outperforming there on the Darden's restaurant side. So interesting stuff out there. You can look at those reports for yourselves. After the bell, we have Costco. We have a preview report for them. They were pricing in $344.63 in terms of where they were trading. They were pricing in on their straddle $14.12, and in the past they moved $10.14. So Costco looking perhaps a little bit juicy. We've also got Micron back there lurking as well. One of the all-stars there of the .com days, still popping up there every now and then with some interesting developments. $49.85 is where they were trading. They were pricing in $3.48. In the past they moved $3.29, so a little bit of extra juice, but not a ton out there in good old Micron out there. Let's look. The season, though, the season is still pretty bloody, listeners. Even though the most recent week seems like it's the best in terms of premium buying, it's about 92%, so it's close to breaking even from an earnings vol perspective. Every other week, not so much. And the season as a whole still tops out at, looks like about 74% out there in terms of performance versus how much vol was actually priced in over here. And Mr. Rocklops, I know this one was kind of interesting to you. We'll touch on this really quickly before we get into the odd block. A lot of you guys have been going on, and a lot of hand-wringing, a lot of articles about this quote-unquote SoftBank whale and what they were up to. Well, they've had to file a 13F recently, and so a lot of people have been digging into that to see exactly what the heck they had on. Now, 13Fs, same with a lot of these reports, obviously a bit of a lagging indicator, so read into that with a bit of a grain of salt, but it should show us at least what they had on up to a certain point. I believe this one was for Q2. This 13F was for Q2 here, and it showed the positions that SoftBank had. Worthy of note, first off, not a heck of a lot of options. In fact, I believe there were no options in this report, so if there was whale activity on the options front, it came after Q2, which I think was some of the allegations. Most of it, they said that a lot of it came in August. And also, they had a heck of a lot of underlying and a handful of tech names, in particular Amazon. Their biggest holding by far, over 2x of everything else, was Amazon, over $1 billion. Then they had a little bit of Alphabet. That was about $500 million, so about roughly half the size of their Amazon position. Then they had Adobe. Interesting one. Don't see that one on too many hot lists. That one looks like it was a little bit north of about $250,000. That's about almost a third of $1 billion. Then they had Netflix for about $0.2 billion out there, $200 million. And looks like below that, Microsoft a little bit less, and then Nvidia. That's kind of their top positions. A little bit of Tesla as well, not quite 0.15, about $120 million worth of Tesla. I know, Mr. Rocklops, this one kind of fascinated you. What are your thoughts here on this 13F for the SoftBank whale, and perhaps what it implies for what they were up to, sir?
Surprising, right? Well, here's the thing. They bought all the stock between April and June, right? So they got great prices. And now what's funny is I wonder what investment bank sold them the idea is to sell all the stock, since they basically just made, like maybe 30, 40% on the portfolio that fast. I mean, some of those numbers probably were pretty big, right? And they're like locking all these gains now by selling the stock and buying calls.
That was my supposition. I know that was the meatballs as well. I think we have to look at do we know for sure that they dumped the stock? Because when I first saw the reports, I was like, okay, this is a stock replacement. This is a no-brainer. Everyone else in the media was running with this was a crazy bullish upside speculation that they were doing. Have you seen reports that they actually did dump the stock, sir?
I did not. I was just trying to figure out, because that's an actual equity filing, right?
That would have to be, yeah.
So, I mean, or those are just a huge option positions, which they could own, but I can't see them wanting, to buy. I can't see them wanting to buy short-term option positions, right? And go all in to what, October calls or November, December calls, unless they, or they owned all that stuff earlier. I don't think the option volatility, if you look at the chart of every vol of every stock, is massively different after once August comes around, everything changes. And they're all pretty consistent with that. So you look at it and you go, oh, okay, they owned the options then. And then all of a sudden, I mean, it literally, it's almost like a house got lit on fire. It was on about middle of August where the vol just went through the roof. 30-day volatility in Apple got to 65% outside of an earnings cycle. Just absurd. And it didn't let up. I mean, and it stayed that way for a good month or a good, 3 weeks. So I'm looking at how the vol has traded, and I just don't see that. I just say it would surprise me if they didn't sell their stock and roll into calls. Because it's almost like the SoftBank guy said, hey, I got an idea. I've got all this money laying around, and all these tech stocks are in the basement. And I think this COVID stuff is a bunch of crap. I'm just going to buy every tech stock I can as fast as I can, in about a 2-week span, and I'm going to put X billions of dollars into it. And lo and behold, I don't know what he rolled to if he bought those options, because that would be, that would be quite a roll. But I would think you would need some time, right? Because you don't want to buy weeklies. You bought Apple at split adjusted, let's say $70, and it's trading 135, right? Like, what calls are you rolling to? You're taking $70 out of the stock. Remember, split adjusted. You're taking $70 out and buying some calls. Like, who cares at that point? It might be the shortest, most successful fund in history.
Yeah, it certainly explains some of the melt up we saw post March, as well as some folks coming in and gobbling up these sizes. I would love to see the next 13F report to see if they had the stock and the options. I don't think that was the case. If they did have that on, then yeah, a lot of these reports out there that have been, hysterical about how bullish they were would be correct. They were effectively doubling down with stock and options. I don't think that's the case. I know you don't, Mr. Rock Lobster. The meatball doesn't either. It doesn't have the air of that about it to me, but we have to wait to see the reports to know for sure on the underlying side. But fascinating stuff nonetheless. Probably more to be said, and we got to do a whole show about what was going on there and some of the impact. Did the gamma hedging contribute to the melt up, as some people have speculated out there? A lot of other fun stuff going on. But now it's time for more fun stuff on this show. It's time to get weird. It's time to get wild. It's time to get odd, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down some interesting, unusual activity that comes across our radar, and sometimes, like we're going to do today, and as the Rock Lobster requested not too long ago, see what a nice guy I am, asking you shall receive, Mr. Rock Lobster. He asked to go back and check out some of the line in the sand puts and just other trades in general that we have profiled, so we are accommodating him because we do have quite the extensive back catalog of trades to come back and check on. So we're going to do that today, see how some of these worked out. How does that float your boat, Mr. Rocklow? Are you happy now? Are you finally less grumpy?
I'm just going to say, let's see what you got to say, but I'm going to at least start. I am not going to start in a straight state of umbrage.
Well, that's at least, that's a beginning. We can work with that. All right, let's see what we got here. First off, we're dialing our Wayback Machine back to July 27th, the heady days of mid to late summer. Just a happy lad. Nothing was wrong with the world back in July. None of this madness. Oh, wait, it did. That's right. I'm sorry. It's been all year. There's been no escaping the long arm of 2020 this year. Let's see what was catching our eye then. It was our old friend, Capital One Financial. They've kind of been a frequent offender on the Odd Block this year. And back in July in particular, he profiled a pretty sizable and what looked like a pretty aggressive line in the sand out here, at least in terms of size, maybe not so much in terms of strike. Let's see. It was the AUG 52 half puts going up for 38 cents, pretty much on the bid. 31,849 times. It was an interesting play for a couple of reasons. The stock, when it went up, was about 65.34. So put that in your frame of reference calculator out there. So they weren't aggressive from a strike perspective. They were pretty far out of the money, but they were pretty aggressive from a size perspective. He got a decent bit of premium for him, too, 38, almost 40 cents. The size was pretty notable. Also notable on the day when we analyzed it was this wasn't really an earnings-related play. Earnings had already happened. This was almost a week after the earnings. Earnings were on July 21st, and then this guy came in and decided to write some puts, which is not usually the way we see him. Usually we see him pre-earnings or through earnings to get a little bit of that bump for the earnings juice out here. This guy maybe listens to our show. He decided he doesn't want to trade around earnings, which there is some wisdom to that. Let's see. The next earnings coming up around October 22nd, so clearly this trade wasn't going to be involved in that. So like I said, the stock was 65.34. This guy wrote about 32,000 of the AUG 52 half puts for 38 cents. Let's see how these bad boys worked out. And it looks like, Mr. Rock Lobster, that they pretty much worked out. The stock at expiration had dropped only about $2. They were down to 63.80, so actually not even $2, but $1.50. And so it wasn't really, and throughout that time period of the options, that was pretty much about as low as it got. They never really threatened that 52 half strike. I don't think it even broke 60. So it was effectively a no-brainer. This guy was going to keep those puts on. Going into expiration, these puts were still open. Go figure. He didn't want to pay anything to close them out. So looks like, Mr. Rock Lobster, this guy did pretty well to the tune of around $1.2 million for his efforts out here. So what do you say on our first line in the sand? What are your thoughts? Do you agree with that analysis? And how does that make you feel, sir? Does it give you a warm fuzzy? I know you like your line in the sand puts.
I have to just say it. I got to agree with you. That's it. There's no way to parse it. I think somebody just made some nice dough on that,
That's more than a girlfriend's Ferrari. That's a nice girlfriend's house.
Yes, that's a decent house right there. So, it's always, it's weird when I look at this stuff, but you look at the pricing and you go, okay, well, they want like a low risk trade and they're picking out the money. Like, okay, well, I can just do that bank CD for no return, or I can sell these puts for, almost 1% for a month. All right, I'll do it.
Yeah.
So
I think we took a pretty favorable view of that one when we profiled it, and obviously put it in our to be watch, so we wanted to come back to it. And it seems like, at least so far, I think a lot of our line in the sand puts we profiled, Mr. Rock Lobster, appear to be performing pretty well. Is that your takeaway as well?
I think so. I don't think we've seen, at least on the current profile, people be warned, but we haven't seen one. We haven't seen anybody really go to the woodshed yet on this.
No, nothing's like exploded through the strike for like 30 handles or anything crazy like that. Maybe now, in retrospect, if we have some now that are more recent, maybe. But in this period, a lot of these went up. The stock was pretty much, all the stocks were pretty much in rally ho mode, except for maybe some of the other ones that peaked on June 8th. So interesting stuff. So yeah, I haven't been keeping a record here, but I think we're at least 3 for 3 or 4 for 4 in some of the recent line in the sand puts that were looked at. Let's see if our next one can keep up. This is a little bit more sophisticated, Mr. Rock Lobster. This one was on July 27th, and this is Coupa Trupa, a.k.a. Coupa Software, C-O-U-P-A, ticker symbol COUP, C-O-U-P. Let's see, at the time, this was July 27th, excuse me there. Let's see, it was what looked like, at the time, that we thought was maybe a mistimed collar. It was the AUG 240 puts going up for $1.95, kind of mid-market, but close to the offer, and that 4,149 times against 4,410 of the AUG 350 calls. And let's see, and those went up for $1 even through the bid. That was kind of a late print out there. Now, worth noting a couple of things. First off, these went up late, so executions are all kinds of weird. Secondly, they didn't go up mark to spread. They actually went up about 16 minutes apart. We were kind of just intuiting that they looked like they were related paper. And again, because they're late, you can't really read into a lot of these executions. We're seeing a lot more gaming of the tape these days, Mr. Rock Lobster, which I personally don't like because it makes this segment so much harder. A total of about 5,000 of these AUG calls went up, and looks like a ratio more, about 10,000, so roughly 2x of the puts went up on the day. So interesting ones there. We thought at the time, if this was a collar, it seemed like they were buying puts and selling calls. If this was a collar, they did it kind of a weird timing, because usually a call, you probably want to have it on through the event you're worried about. In this case, if it was earnings, this is not going to do it because earnings were a couple of weeks after expiration. So it was a pre-earnings collar if that was the case, and a nearer term one. So it was kind of weird to put on a nearer term collar. If they did it on a ratio, that's also weird. And also to do it not through earnings. If you want the protection, get it through the event that everyone's spooked about. And so what happened, Mr. Rock Lobster, and I'd be curious because the execution on these is kind of funky, so maybe you have a different interpretation. If so, we're happy to hear it. But looks like the stock immediately after this went up on the 27th. The stock at the time was, let's see, we have 293.22 was where it was when these calls went up. And the stock pretty much in the next couple of days rallied in their face immediately, went up to about 300 just in a couple of sessions. So it looks like this guy on the call side, or gal, we don't know, they panicked a little bit. And they took off the call leg just 2 days later on July 29th. And they did it for $1.85. So they lost about 85 cents on that about 5,000 times. So far, no bueno there on the call leg. Let's look at the puts, though. Again, the execution of this 10,000 total was kind of funky. The puts went up kind of mid-market in the block that we saw, but closer to the offer. And then there's a lot of other smaller chunks that went up for a total of 10,000. And those were kind of all over the place. Now, the vol actually came in a little bit on the strike, which was kind of weird. Maybe they were selling them. But the execution, a lot of it was biased towards lifting offers there. So it was kind of a weird, fragmented execution all over the place. And the stock was kind of bouncing around a little bit, too. But looks like the puts were potentially a big loser. If this was a collar, if they were buying these, and they did about 10,000 of them, these bad boys did not work out. The stock was 301. Remember, they were buying the 240 put strike, listeners. They needed a pretty sizable downside move for these bad boys. And they were paying up for them, too, nearly $2. That's a lot for these puts. And the stock was at 301 on expiration. So these puts did not come anywhere close. So it looks like this could be the big loser of the whole thing on the option side. Could be a big loser. Now, there could be a caveat. We'll get to that in a second. But it looks like on the put side, they lost it's like about $2 million on the puts on average. They paid a bunch of different prices. So we averaged it out to about $2, 10,000 times. So you're talking about $2 million on the put side alone. The calls went in their face as well. They lost not quite $500,000, but $425 on the calls, all things considered. So you put all that together, that's a pretty big loser, almost $2.5 million. Now, the caveat, as I mentioned, was the stock was higher on expiration. The stock was at about 301. Now, if you're putting this on, if it was a collar, which we kind of interpreted, then they probably have to have the stock on. So in that case, you got to assume that the puts probably line up with their position. So 10,000 options, probably at least 1 million shares of the underlying go in there. So you got to figure they made about 10 handles or close to it on the stock side. So maybe they're up about 10 million on the stock. They lost $2.5 million on the options. They're still smiling at the end of the day. So if you add the stock component to it, maybe not the case, but there's a lot of moving parts on this one. There's a lot of different ways. Maybe they were crazy. Maybe this was actually a strangle. Maybe they actually sold those puts. And that's the side I'd rather be on. And that, of course, could change this completely. But the execution was so fragmented all over the place that it does kind of raise the question. I mean, the vol did come in a little bit, so that could be an indicator. But that's not always the telling point, particularly when the stock is moving around a little bit. Mr. Rock Lobster, a lot of moving parts on this. You got the calls, you got a bunch of puts going up different times, not listed as a spread, but we kind of put them together. And then the stock component. You wanted to revisit these, sir. What are your thoughts on this crazy, potentially mistimed, potentially ill-performing collar, sir?
Only if it's stock, right? If they don't have any stock against it, this is not looking so good.
No, it sucks on the option side. Yeah, there's no way around that.
Well, and another weird thing is, like, this is a thing with collar trading and I think buy rights in general, and with TOSAW when he chimes in maybe at the end. But if you sell a call against your stock and you get taken out, be happy. But like buying the call back and taking the capital loss while you still have the equity.
Yeah, he freaked out. He bought that thing back 2 days later.
That is the road to just unhappiness. Like, just let the stock get taken away and then like spend a few days looking at the money you made and decide how you want to get back in. You know, it's just, and I understand there's a tax consequence to that, which is not small, right? And so I think buy writing options is great in a qualified account. And again, it's something that TOSAW can, but if you're in a trading account where you're going to pay taxes and everything, and you don't want to really get rid of that stock, I think that type of trade is tougher just because you're stuck with that big tax bill, or what is it, 15% or something. But it's you have to be okay with having the stock get taken away ultimately. So I think the collar trader, if you're sitting on 4 million shares of stock, or what was that, around 10, like just let it get taken away at 350, but I guess they didn't want to.
Yeah, he wasn't even close to a strike. He had a 350 strike. and he panicked and took him off. So yeah, there's a lot not to like in the execution of this and the way it was managed. Also worth noting, listeners, if they did have the stock, and I said it was maybe a bit of a happy ending, not so much now, because if they still have the stock is now 267. So they've lost all of that and then some. They're down roughly 30 million from where they were a little while ago. So, yeah, if it was just stock and they didn't put anything else on against it, this is just no bueno the whole way along. Mr. Uncle Mike, you have been invoked. This is kind of your territory, funky collars. What do you have to say about this trade in general, sir?
Yeah, I mean, when you put on a covered call, like the Rock Lobster says, you do need to be prepared to get called away on the stock. Sometimes that can be frustrating. I know in the triple income, we have to make the decision because we do, in our triple income portfolio, we do it all with dividend stocks. And so we have to make the decision right before ex-dividend date. Do we roll it? Would it be more beneficial for us to roll up the call, or would it be more beneficial for us to just miss out on the dividend? Because if we get called out, that means that the stock has that much of a gain and we're fine with it. So we have to make that decision quite a bit. But once again, we advise our clients there's going to be tax implications whenever you're doing a covered call trade. So I think that ultimately the way with which to handle it, and probably the last 4 years or so, we've really been doing a lot with this, is just to use a call spread. And that way, if you're worried about, if it's just like maybe $1 in the money and you get called away, most people are fine with that. I know I am. But the frustration comes as a covered call trader if you don't have the intestinal fortitude to be fine with looking at your stock being 20% in the money. If that bothers you, then I would highly recommend looking into the call spread. You won't get as much premium for it. So if the stock were to theoretically stay the same, it won't be as beneficial. But if you are concerned with the stock going up and you missing it, and you hate that horrible feeling of, well, should I roll it up? Should I stay in it? Or if you just don't want any part of that, call spread achieves all of that. And so the last few years, I've become a big fan of that. Not to say that we never do covered calls. We believe that there are times for those as well. But the call spread tool is something that I would definitely explore along those lines. And, if you're doing a collar, oftentimes collar traders, I know I was guilty of this many, many, many years ago. You become a perfectionist trader, meaning, I'm not paying a debit. I'm not going to pay money to do this. I'm doing a collar. So I'm not paying that nickel for a debit. So then you restructure the whole trade, do a bunch of things that really may or may not make sense, all for a nickel. Whereas if you just pay the nickel for the hedge, yes, it's not perfect. And yes, you're paying for something, but understand likely you're going to get out of the trade before expiration. Pay the nickel. So anyway, that is my take in the collar realm.
Pay the nickel, says the man. And this guy, he had 50-odd handles to go. If he got up there, he made so much money on his stock that he's not going to be caring about the couple of bucks he's losing on these. Yeah, the whole thing is just is kind of interesting, to say the least, out here. Let's look again let's really quickly, before we get into some of your questions, really quickly, we got the Meatball's favorite name here. This is Darden Restaurants. Back in the odd block again. We talked about them about 10 days ago. We had a strangle we profiled in there in October. It was the OC 85.95 strangle going up for about $7.55. Now it seems like someone today is splitting the uprights in that strangle, listeners, to the tune of the OC 90 puts going up for $2.55 below the bid over there on the ISE. Worth noting, I mentioned earlier, they do have earnings coming up, so there's a lot of earnings paper going up right now. But Mr. Rock Lobster, I won't get into all the stock where it's been stuff because we just did this name a little while ago. But in general, sir, what are your thoughts? Is this another, perhaps, line in the sand put? And should we add it to our to-be-watched category? Maybe when we come back to the strangle, should we also profile these puts, sir?
Well, I just think in honor of Mr. Meatball, it might not be a bad idea because this is one, this is his whole gig, right?
That is his whole gig.
So,
he hangs his hat on Darden Restaurant's hatred.
I mean, Darden Restaurant, $30 was $120. And this is kind of pricing. Everybody's assuming that they're going to go back to people are going to go back to a restaurant. I mean, the earnings they came out this morning, and somehow they eked out some money. That's pretty amazing. So I mean, this is a favorite. Like a lot of families, like, okay, I'm not cooking tonight. We're going to go out to dinner. So at least the way it looks, the pricing right now. It could be it's an aggressive line in the sand, but, the earnings are out and, hey, people are going to the Olive Garden. So that's why generally people buy stocks like that, because they think they're going to be there. They're going to be there for a while, because those are the franchises people go to and spend money. So,
hey, unlimited salad and breadsticks. That's great for delivery too. Why not? Hey, you know what else is great? A bunch of your questions. Let's get to them. A little bit of the old Thursday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. Let's get down to business here. First up, we got Jared Burgess. Jared says, "Gents, thanks for all the great insights and entertainment. I've been listening for a while now, and I'm proud to say I've added terms like greasiest of and uncleest of to my vocabulary thanks to you." Well, I'm sorry, Jared. That's clearly my fault. My vernacular has infected yours. I deeply apologize, sir, for dragging you to the dark side along with me. He says, "I certainly look forward to my weekly, quote, filling of the air holes." Oh, no, I really have infected this guy. By Mark and the crew. Speaking of which, everyone needs to chime in to vote on a call sign for Mark. We can't just keep calling you the other Mark or the host guy. By the way, I'm not the other Mark. I'm the Mark. There's no other Marks but me. It's the one commandment on this network. There should keep no other Marks before me, and that's kind of our one commandment here. So the host guy. I don't know, everyone calls me the host guy. Maybe. I know everyone is thinking the same thing. I recommend a listener poll. And I'm sure the lobster, meatball, and uncleist will have some thoughts on the matter. Not to mention Mr. Passarelli may have some fun with it, too. Yeah, we could do that. People have suggested many names in the past for me. Someone recently loaded the OG of Options podcast. I thought that was kind of funny. The voice of Options has been put out there very frequently. A few others. But again, usually I'm the dispenser of the nicknames, so I don't really dispense them for myself. I kind of keep myself above the fray in that sense. But if the listeners coalesce around something, who am I to judge? Let's see. Quick question. He said, this is for you, Uncle Mike. I tried to close my SLV position several times before expiration today. This was last Friday he had expiration. He says, the price even closed below my bid on some days. Luckily, they went in my favor, but I generally close early to limit risk closer to expiration per your sage advice over the years. Well, I'm glad to see we've infected you with something other than our vernacular here, Jared. That is a good habit to get into. He said, what gives with SLV, Uncle Mike? I've looked on the SIBO site, but no luck. Best regard. Oh, he's got his own nickname, J-Bone. Well, J-Bone. All right, J-Bone. Well, Uncle Mike, you have been invoked, so we'll start with you. First off, did you have any thoughts on his what he wants my handle to be? Have at it. I'm kind of scared to ask you. Maybe I'll go with Airwolf. That's kind of a fun one. And then B, he has a specific question about having a hard time closing out his SLV options, sir. What are your thoughts on that as well?
All right. In terms of the host name, tell me what you think of this, Rock Lobster. Marky Mark and the Option Bunch. What do you think of that?
Marky Mark and the Option Bunch. Marky Mark. I think it's catchy. But I don't know if he's going to want to go by Marky Mark. I always thought benevolent dictator.
What do you think, Marky Mark? What do you think?
I've heard a lot of names out there. I haven't heard that one. I have heard, sexiest man in options. That's thrown around a lot. Things like that kind of get pushed around. Not by me, but many others out there. Mr. Rock Lobster likes to call me the benevolent dictator, which is always kind of funny to me. But yeah, sexiest man alive / in options. That also works too.
We can just cut it short and just say his benevolence. His benevolence. Because it is his radio network.
That's true. That's true. But I like how I said Marky Mark, and somehow it got switched over to Sexiest Man in Options somehow.
It wasn't me. It was the listeners. I didn't do that. I'm just expressing their will. I am the voice of the listener's will.
Oh, boy. Anyway, let's get back to SLV options here. So sometimes you don't get it right at the midpoint. So I would say that I've had more success with SPY through the years. But for the most part, I would give SPY in terms of getting filled an A+. I've never had any issues with it in terms of getting filled. And I would give silver, or the SLV options, I would give near term, I would say an A. And then long term, like if you do leaps, I'd give the leaps a B+ if you had to do that. But that's been my experience trading the SLV options. I would say it might depend upon what strikes you're trading. But I'm not sure. If you want to reach out to me further, I'd be happy to go over it with you. But for the most part, I've had very few problems with SLV through the years.
Yeah, we don't know kind of what levels he was working, how realistic they were. Sometimes it could be a pretty outlandish bid, and he says it got below his bid, so that is kind of weird. But Mr. Rock Lobster, do you have any thoughts? How much do you agree, A, with the listener suggestion of the sexiest man in options? What level of your high level of agreement do you have? And then B, if you have anything to add on SLV option liquidity, have added, sir. But the first one, obviously most important.
The sexiest man, you know what I think? Sometimes it's best to let the listeners decide if that's what they want. I think, something befitting your exalted status as the benevolent dictator of the Options Insider Radio global conglomerate is, maybe a little more fitting to the stature. But maybe your listeners do find you the sexiest man in options. As far as the funkiness on SPY, weird. Like why that trade would, why it would be able to close it. I think that's, I don't know quite what the deal is with that one. Depends on what even closed below my bid on that. That's odd. If the price closed below a posted bid, and I think maybe the reason could be is your bid is on one exchange, but it's not on another. So the last price is actually traded below where your bid is. And that's what they're somehow, for whatever reason, that's the price they're using as the close. So, but I find that odd because normally they would close it at the highest bid price. But maybe if that option wasn't up, that's the only thing I could think of that would make that to make that strangeness happen.
Yeah, that is weird. Send us some details there, J-Bone. I like your handle, J-Bone, out there. If you want, maybe we'll do a listener poll. People have suggested many names for me over the years out there. It's the hazards of the game. But yeah, it's not one I put a lot of effort into. But if you, I don't name myself. You can't really give yourself a nickname. But of course, like I said, I didn't express that. That was the listeners just putting out there the sexiest man in options. It's just floating out there in the ether. I had to just snatch it. But that's an interesting one. Send us your details on this trade. Maybe we can give you some more insight there in J. But maybe we'll have a listener poll or something along those lines. If you have your suggestions, hit us up. We'll see what we like amongst them. All right, let's do one more quick one here, Mr. Rock Lobster and Uncle Mike. This comes from BZ Tokyo. That's like the handle, BZ Tokyo. He was listening to our show, episode 933. That was the return of Volman plus GME and BlackBerry. I keep saying BlackBerry. Bed Bath & Beyond Death Smash. That's GameStop, obviously. He was listening to it on YouTube, and he said that was the show where we talked about. We had some weird activity, Mr. Rock Lobster, in Capri Holdings. That's that holding company for the fashion names. And there was some weird upside paper we were talking about. We were trying to figure out why the stock was moving and why someone would be loading up on these options. And he chimed in and said, the Capri mystery is easier than you think. Just follow the halftime report or fast money. He says, Grasso's been pumping this one for 2 days now. Retail frenzy, and the beat goes on. Well, that might explain it because I watch literally zero of CNBC or anything along those lines. I try to make a point to avoid them whenever possible. So maybe if they've been bumping one of these ones up, that would explain why, A, I didn't know it, and B, why maybe some folks, it's about as plausible explanation as anything else I've seen out there. Mr. Rock Lobster, any thoughts on this guy debunking the Capri Holdings mystery, sir?
It certainly could be. I didn't know Capri had such had such a fun. Maybe the Nigerians or something were buying calls and everybody jumped on board. But it's certainly possible, right?
Anything is possible when you're talking about fancy capri pants.
Days, so. I see. Huh?
I was just saying, anything's possible when you're talking about fancy capri pants.
Exactly. Well, the Michael Kors, oh my gosh, of TV show fame.
I just think it's a weird name to have for a fashion company because it makes you think all they make is capri pants, and that's it. It's a very limited offering. As we head on into our final segment, it's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. We kind of came up against it during that last segment, answering a bunch of your questions and discussing nicknames and so forth. So we're going to make this a combo around the block, and where should folks go to reach out to you as well? So we'll start with the Uncleist and Mike. Sir, first off, what are you watching? And then secondly, where should folks go if they want to reach out to you with nickname suggestions or SLB questions or anything else, sir?
Definitely watching to see if we can have a follow-through tomorrow in the S&P, and also the last 2 hours of the day today to see where we're going to finish with things. Watching everything news and anything along those lines, quite honestly. There's too many things to mention in today's world of what I'm watching. In terms of where you can find me, stcharleswealth.com. I'm a financial advisor who's not afraid to use the option product when appropriate, and I would love to have a conversation with anybody.
Uncle Mike, sexiest man in financial advising. Hey, I don't know, I'm just putting it out there. We'll see what sticks. Again, I am just the voice of the people, listeners. Mr. Rock Lobster. I'm not sure. Maybe he's the sexiest man in Maine because that's kind of a low bar. Mr. Rock Lobster. Here I am just insulting the entire state. Mr. Rock Lobster, what are you watching? And if folks want to reach out to you, where should they go? What should they do?
Right now, I'm trying to get the crickets out of my office so they don't disturb you. They should go to optionpit.com, look at our memberships. If you want to trade some funky vol, if you want to do some trading Legion, if you want to do some sharp betting, some vol edging, all those products where we use vol to help design our trades, come on over to optionpit.com. I just did a little Edge Hunter webinar about using the actual market vol to try to help you shape a trade that you might like. If you're interested in that stuff, come on over to Option Pit, and we can help you do that.
OptionPit.com is the place to go. And on behalf of the Uncleist of Mikes and the rockingest of lobsters, and indeed myself, dare I say, sexiest man in option? It just sounds funny. And, of course, all of you out there, I want to thank all of you for downloading, streaming, subscribing, for sending in such great curveball questions. If you have your suggestions for nicknames, have at it. Be gentle. And, of course, if you want more, stay tuned. We'll be back in about half an hour. Talk some TWIFO, all that good stuff going on out there. A lot of stuff popping off there. Should be fun. We'll pump some fun stuff in the live chat in the interim. And then, of course, we'll be back tomorrow after TWIFO with a little bit of vol views back to the regular time, noon Central, 1 p.m. Eastern. Then it all kicks off again on Monday with more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.